Hello guys, and welcome to the first weekly market review of the year. It's good to be back after the Christmas break, but now it's time to trade, and I wanted to bring something different because I see a setup on crypto. So Bitcoin basically sold off 36% on this leg, and Bitcoin tends to give bounces um, once it's completed a pullback or a correction like this. So if you watch here in the previous instance, something similar happened. Now on the current leg, we also have the weekly RSI, stock RSI, oscillating at the lows, and this is just one ingredient that by itself doesn't mean anything. But after knowing the stats for Bitcoin, that a 30 to 35% drop tends to provide a bounce, and looking at where we are on the year, we are is on the fourth day of January, right? The drives from the yearly open are not something you want to be fading by itself, right? Now you combine that idea of not fading drives off the yearly open with the fact that the weekly RSI is oscillating at the lows, and we've had a 36% drop and a whole month of accumulation at this area, and honestly there's no reason to get short. So if there's no reason to get short, you either wait or you get long, right? So I think going long is something that's gonna pay. Now I'm not calling for um, a new trend to develop from here. Actually, I don't know, but I think that it's gonna go at least to clear these highs here around 95k. I think somewhere around here, honestly, somewhere around here. And what happens then? I don't know. It might just distribute here and then start going lower again. So, but this is a very clear setup. So once we have a weekly open, I think that you know stops on around here for longs should be safe, because I honestly think the yearly open on a pullback would be something that would defend price, and we want to. It's like we need to go higher before we go lower, if that makes sense. So that's the setup I'm watching. So I'm basically just let's see if I have something like this. So we have a weekly open, and I just want to see price just make a low below it, reclaim, and I'm gonna get long towards here. This is a small trade, but I think it can really work. The odds are with us on this one. So now let's go back to FX, which is where I specialize on. The euro. Well, the euro has had a fantastic year when we look at the yearly candle. This is the 2025 yearly candle. And I think the macro reasons for the euro to keep going higher against the dollar are there. Nothing has fundamentally changed. There's a big divergence between central banks, and it will keep happening. So we also know that the balance sheet for the US is gonna keep expanding. That's not something that we're gonna have on the European Union, where the balance sheet is contracting. So this yearly candle that we are forming right now, uh, it should make a low, and that low should happen in the first half of the year, maybe the first 3 months of the year, before we start pushing towards 120 or 125. You know. So, but the euro has spent half of 2025 in a range. Um, it only started showing momentum uh, during the first part of December, right? But ever since, it's like it got stuck around this area and it's now sitting at the yearly open. So, what do we have here? Well, we have the expectation of a bullish year for the euro and a bearish year for the dollar. But on the short term, we don't have any reasons to go long on the euro. Moreover, it's looking weak across most pairs. When we look at EURUSD, it's looking very, very bad. When we look at EuroGen, it's also not looking like the strongest. So I'm inclined to short on the short term right now on the euro. Moreover, if it's in a range, then all it's done on this leg here is coming to range highs, and you know it's rejected 2 times. So I could see the argument of why someone could say, well, if we've tapped into range highs, then it might be time to go into range lows. And that's something that I've had in the back of my mind because we didn't properly feel um, this explosive move, right, with this drop here, with this lows. And I was expecting a deeper move down, but we didn't get it. So now, for the next week, when we look at the price action we had last week, we saw the euro trade above the yearly open briefly and immediately get sold. And the way it looks, right, it's made these 2 attempts around 118, right, and it's sold off, and it's now back at the origin of this move. We also have the yearly open above the current price, so that's immediately telling us that we should be leaning bearish because we're going to see the low of the yearly candle be formed, and we're looking to catch that before we form the body. We will be above here, right? So one could have a very, very relaxed approach to trade this, which would be to say, okay, let's this do whatever it wants, okay? Because it's looking bearish. I don't want to engage with it, so let's watch it make a low. And once it reclaims the yearly open, then I engage with it. I assume that this is the low of the year, and I get long, balls deep long, on the expectation that we're gonna push towards 120 at least. But me, I like to trade short term. So I think next week the euro is going to drop. And one of the reasons why I believe that is when you look at this move on the left hand side, right? And the way FX tends to trade, it wants to fill these inefficient moves, these big explosions. Uh, the price just wants to fill those and be at balance. So this area here had a big impulse, and it also sits at the mid range. So because we failed to push above this price zone, we are now sitting at this support area. And you look at the price action around the yearly open, it's bearish, right? Even though we've not had many, we haven't had a single H4 close above the yearly open, and you have these weeks, right? Weeks and weeks failure to close above that level. So the plan is very simple, is to catch the expansion to the downside, assuming that this is going to hold. So one trade I want to take is very simple. Just blindly short the yearly open and target towards something like this, right? Because I think this is a great place to reload your longs. So it does make sense to get out of the short. And also the stop loss here, it's kind of my hard stop loss, because I wouldn't want to see consecutive H4 closes above the yearly open, nor a daily close above the yearly open if I'm leaning bearish, right? If that happened, I would flip bullish. It's very simple. However, because this move was kind of inefficient and euro is just looking weak across all currencies, I think it makes sense to look for shorts. Okay, you could. I actually believe you could tighten your stop loss. Do something like this. So from the current open price, it's going to be around 20 pips, 18 pips towards the yearly open. So my plan is to leave a limit around here, but we could also get a scenario where it just doesn't trade there, okay? We don't get filled and it just breaks below the weekly open. Well, then we get short on the weekly open. It's okay. We put our limit. If we see a breakdown from the weekly open, we get short and we trade into this area, 116.5. If by any reason we get H4 close above the weekly open, then after breaking down, okay, then we would take that as our technical invalidation and just get out of the trade. But there's not much to say about the euro currently. We are bullish on the year, so we want to really get heavy on the long side, but the price action is not matching our expectation. So we have to follow what price is doing right now, keeping in mind the macro side with us, okay? So I don't have a clear read on the pound. Staking liquidity from both sides. I think something similar might happen as well, where it just pulls back from here and makes a low. I think both GBP and AUD are going to go higher in 2026, but you know, the euro is the best short right now, and then after it won't always be the weakest currency, right? We will have signs to look for that reversal, and then the euro will be the strongest one. And I want to jump to EURUSD because that's where our signal lies. Okay, so EURUSD is sitting at an area where we went long here, right? And this signaled the top on AUD/USD, which was around here, if I'm not mistaken, the December 10th. Yeah, exactly. Look at that. And you can be sure that then the euro performed pretty well against the US dollar, right? This is the December 10th, and AUD went flat against the dollar or even dropped. So now I think EURUSD it's looking like it wants to go lower, and I tend to get this direction right. This zone, I think it's been tapped so many times. Okay, we've had 1, 2, now 3 attempts we, where we bounced because we were tapping into the origin of a move up, right? So there was a lot of demand sitting around this area. But now we've done that so many times, and we are below the yearly open, right? And I think it's just time to take out this low here, which we use as our invalidation on the long we took here, and time to go lower. So on previous reviews, I mentioned that the golden long setup that I wanted to take on EURUSD was waiting for price to come into this area because this is untapped, and this is the origin of all origins. Like, this is the move, this is the origin that led price into this whole leg. This is massive. So of course this is going to be a magnet, and I just think EURUSD wants to go lower, and we are going to reload our longs here and look for euro longs once EURUSD trades into this area, because this will tell us then AUD/USD is probably going to underperform, and euro is going to be the outperformer. So we want to long the strongest currency. So I think with the weekly open, we can engage short and assume that this high is as safe. But I wouldn't mind another attempt and sell off and close below the yearly open and then get short. But I think this is the target, 1.73 for EURUSD. But again, we can apply similar structure, a similar plan than the one we had on EURUSD using a weekly open. Okay, so we can just wait for price to make a high, close below, and then just look for the extension lower. So that's EURUSD, and I don't have a clear read on yen pairs. I think they're gonna pull back on the first part of the month or during January in general. But then, maybe 2026 is a year for continuing the grind up. I don't think there's a fundamental reason why the yen should strengthen massively, um, other than positioning, which is not crowded, in my opinion. Everybody still wants to short uh, uh, currencies against the yen. So I think that one of the last things I wanted to cover was oil, because I mentioned a setup long ago that I was looking to take, and I thought oil was going to go higher because it tends to complete these, go into these accumulation phases, right, like here and here, where it clearly draws a range, and once it breaks out of that range, it goes up between 15 to 20%. And also time is involved, like uh, 6 months seems to be like a sweet spot between all those legs up, which then fully retrace, and we end up going back to the same price. But it was doing something similar here, where it went into a range, right? And it had been like 6 months since we had this Iran conflict, I think, that caused price to go higher. And honestly, no one wants to get long oil. So I thought, well, it might be a great idea. But other than that, positioning blindly long around this area, I had no setup until we had a clear breakout of this bearish trend line, right? Once this happens, then we have another reason to get long and target was 65, 66, or maybe even 70. I don't know. You would just need to calculate something like this. Yeah, 50%, 15% is kind of nice. So until we get that, I don't think it's worth taking longs on oil, right? I think it might just want to drift lower and bore everyone, but we still need to give it some time because um this, but if we look at this trend line and we use it as something to give us a long trigger, then we still have a lot of trading days before price clears it out, right? Which around here is like the last day of January. So come February, we'll probably talk again about oil, but right now I'm not seeing anything interesting, even with the Venezuelan conflict. So on the last place, I wanted to cover gold because it's had a pretty good year. I was quite surprised to see it rally even during the last days of the year, and I was expecting a correction, um, but it didn't come. So I still think the long setup here, it's not there. I don't think it's just gonna now develop another um, move higher. What I'm looking for is some intraday trading. I think there are some good opportunities. So I think gold, right? I think gold is a great long if it comes into this zone here. And the reason for that is very simple. Um, if you look at, I could draw a box again here and you would see what I mean, which is is basically wait for price to develop a range that leads into a breakout or a explosive move up. Once it retraces the origin of that, is a great place to look for longs. Buyers are gonna be there, and this range is not gonna get breached, or it shouldn't. On the first touch, that's it. It might get breached with enough touches. So right now we have something similar, right? We had this range, which was a breakout of this bearish trend line. Then we went into another range, and price is just ranging there. I think it's just gonna do this, right? And from here, give a bounce into the yearly open. And then what it does, I don't know, but it's not my problem. I just want to make money here on this bar. Uh, well, yeah, it doesn't make any sense for me to give my thoughts on where I think this is going. But yeah, I think that was everything I wanted to cover. So I'll see you guys next week. Let's see if we can make money this week.